Hello and welcome. You're watching First Take. I am Suyash Maheshwari, and with me in the studio as always is Amit Ranjan. Now we have got an action-packed half an hour ahead of you, filled with the latest updates and insights from the world of stock markets this morning. But as always, let's kick things off with a quick check of the mood on the Dalal Street. Now Indian markets opened in the green with the first tick for Nifty coming in at 19,232 mark. And this was on the back of a positive handover from global markets. Now, US stocks ended higher on Monday as traders kicked off a big week filled with a Federal Reserve rate decision, jobs report card and Apple's earnings that will come out later this week. Now, S&P 500 jumped 1.2%, its best performance since late August. Nasdaq Composite on the other hand was up 1.16% and Dow Jones also ended with gains of over 500 points. Now Asian stocks on the other hand opened in the red, spooked by the weaker than expected PMI data coming from China. Oil prices also slipped about 3% on Monday as fears eased that Israel-Hamas war would disrupt Israel-Hamas war would not disrupt supply from the region, and investors grew cautious ahead of the ahead of the US Federal Reserve's meeting. Now, Brent crude is currently trading around the $86 to $87 a barrel mark. The yields on 10-year US bonds was trading at around 4.86 mark. And the dollar index overnight has corrected against all major currencies and is currently hovering around the 106.4 mark. Now coming back to the Indian markets seems to have paired the morning gains with Nifty currently trading on a flattish note as I can see on my screen. Sensex is also down about in the red this morning. And as you can see on your screen at 9:30 a.m. Nifty 50 was down 0.03%. Trading, I think it's below that 19,200 mark to 19,232 was where it opened. Sensex on the other hand fell about 0.07% and is currently just above that 64,000 level. Now mid cap and the small cap 100, the broader markets in general are trading with moderate gains up about 0.5%. Nifty mid cap 100 was up about 0.6% and the Nifty small cap 100 as of 9:30 a.m. this morning was up about 0.44%. India VIX, the volatility index, is also trading with the gains of about 3.3% this morning. Now these numbers are as of 9:30 a.m. this morning. It is currently at 11.87 levels. Amit, the market overall opened on a buoyant note. Nifty claimed that 19,200 levels, a good bounce back we have seen in the last 2 or 3 sessions, but pretty much a flat, the returns have paired. How are the sectors looking?
All sectors, but for IT, where there was some pressure, are in the green, at least for now.
All right. From what I can see, Nifty Bank is sitting firmly above that 43,000 mark, the crucial make or break levels as pointed out by analysts. Let's take this conversation with the first guest on our show, which is Mr. Brijesh Ail of IDBI Capitals. Good morning, sir. Welcome to First Take. Thank you for joining us.
Yeah, hi, morning.
Now, sir, Nifty, in the last couple of sessions, barring today's session, has risen about 300 odd points or so from its recent low. Has that bearish trend that we were talking about all last week, has that reversed, or is the overall sentiment that you are taking, given that the primary contributors to this rally has been a few blue chip stocks such as your HDFC, such as your Reliance Industries? What's the overall read on the market sentiment? Was the bounce back that we saw a dead cat rally sort of a bounce back?
Hi. So the view remains cautious because what I can see is the Nifty, the way the market corrected, the trigger came when it broke that 50-day moving average and then eventually the 19,500 mark. And having said this, after 19,500, 19,200 was also the very important base. But now, the last week we saw the Nifty almost went back to 18,800 level, and then we have seen now for the last 2 days there has been a bounce. So my view on the market is still cautious. I believe this 18,800 might be retested. The data on the FIS on the index future is extremely negative. They are short by 1,57,000 contract, and the long short ratio is still at 12%. So there is a little bit of more space on the downside. The bounce which we are expecting in the last 2 days was because of the oversold nature of the charts. And even today in the morning, there is we have seen some open high kind of a structure in the Nifty. So this firmly says that this, and anyways, the bounce which I was expecting was more or less close to 19,300. I'm not expecting a bounce to go beyond this level. And today, the way the market, the volatility is there, India VIX is up by 3.5%. So I think today, at least for the day, this whatever the high we saw at the start of the market, like 19,233, I think is likely to be held for the day, and there is a chances that some slight selling might be seen. There is a possibility 19,100 on the cash levels might be broken during the day, and somewhere close to 19,050 is what I can see. And directionally, if I need to speak, then once it breaks the 19,000 on the downside, then I think again the momentum will scale up for the further correction. And if you look at the 200-day moving average, then it's somewhere close to 18,600. So somewhere I believe this level can be seen. So I have a very cautious view. My entire view will go like it will be negated only if this 50-day moving average, which is close to 19,600, if that is taken out on the closing basis, then my entire bearish view or cautious view will be, I will change my view. So as long as that is not broken, I will be extremely cautious on the market.
Extremely cautious on the overall market. Expecting some sort of consolidation in the coming few sessions, Brijesh?
Yeah, so this, as I said, 19,300 is a maximum upside. Today we have seen a momentum till 19,233. So maybe today can be one negative day, and again maybe after maybe for the week the bias is positive. Some bounce back is expected. All the positions will be held with the stop loss of 19,000. By any chance, if 19,000 is broken, then whatever the small trading calls which we are taking during the day or maybe for the week, that should be stopped out if 19,000 levels are broken down.
Now, Brijesh, Nifty Bank has also done fairly well in the last couple of sessions. I mean, it's holding on to those 43,000 sort of levels, has gained about 800 odd points or so in the recent pullback. What's your overall view there? What are the levels to track for Bank Nifty?
Bank Nifty 43,500. There's a lot of call writing which are getting executed. So that is going to act as a resistance. So Bank Nifty was one of the weak segment where we are seeing a decent kind of correction. Even in case of Bank Nifty has broken the 200-day moving average. So definitely the Bank Nifty is weak. We saw some buying in the PSU bank, but then the Bank Nifty private banks are not that strongly placed. Until unless 43,500 is not taken on, this works well from the derivatives as well as the technical level. Derivatives, there is a good call writing at 43,500, so this is going to act as resistance. And even 43,200 is the 200-day moving average for the Bank Nifty. So this zone of 43,200, 43,500 is just slightly, we can say this is a resistance zone. So it has to be strongly take this out. By any chance, if these levels are not taken out and we see a correction below 42,500, then the pace for the Bank Nifty on the downside will be much larger. 41,000 is what I'm looking maybe for the next couple of days. So this is the range, 42,500 and 43,500. This 1,000 points is the range for the Bank Nifty. So either side breakout or breakdown will trigger the further coming directional trend.
Good morning, sir. Between Nifty 50 and small caps are the ones that have shown some resilience. Do you see some rally left in them in the broader markets?
I think somewhere, barring auto and this Bank Nifty, I think the rest are all segments. For example, the realty space is looking good. To some extent, the PSU banks are looking good. Even I do believe the IT may not see that kind of correction. So even there would be some positive momentum in the IT. So I think if the market has to be like we need to see a good run up in the market, then it would be the blue chip and the front line would be the counters which will take for the higher side. So the more bets will be on the heavyweights.
Now, Brijesh, as we are in the thick of the earnings season, two companies that we were tracking from yesterday, TVS Motors, let's begin with that. TVS Motors, came out with a healthy set of numbers. Margins were at record high. The overall performance seems, to have beaten street's expectation. The stock is doing pretty well. I think on a year-to-date basis, it's up about 50% or so, outperforming its peers. What's your view there, sir? How is, TVS Motors looking at this point?
So actually, if you see the TVS Motor for the last 20 months, it has been continuously trading higher and higher. And we eventually spoke, we had the view of somewhere close to 1550, 1600. There was a target for the TVS Motor. But with the yesterday's momentum and with the result update, I think another 100 points kind of a move is left out in the TVS Motor. Somebody who's holding the position can hold till 1700 mark, and very with 1550 would be the lower side support. If that is broken, then I think there would be some loss of momentum in the TVS Motor. But right now, the structure and the overall, the weekly, monthly pattern is quite positive. I think one should ride the momentum. One should look for another 100 points kind of a rally, and it would be wise that we take some profits over the 1700 level. So profit booking should be done at the on the bounce.
All right, that's the word on TVS Motors. Profit booking could take place. Also, Brijesh, I want to touch upon UPL. UPL, the stock was down about 4.5% or so. Not a good, quarter. The quarter gone by was not very great for the company. In fact, the street was expecting a profit figure to the tune of about 300 crores. UPL, on the other hand, has reported a loss of 190 crores. The company has also cut guidance and I think both revenue and EBITDA guidance for the complete year, and it does not see revenue growing at all this year, this time around. Now the stock has been under a fair bit of pressure along with other agrochemical stocks. It's down about 25% or so year to date. In the last month itself, it's corrected by about 11%. Do you expect weakness to continue there?
Yeah, definitely. Because if we look at the larger picture, there has been clearly a range breakdown in the counter, and the 600 was the base where that breakdown has come. So I think below 600 is definitely weak. Even if we see any kind of pullback, I don't see that pullback will go beyond 600. So the directional view for the UPL is negative. I would be watching it somewhere close to 500 to 480 levels on the downside. So further more for 10-15% kind of correction is left in the UPL. So not a very good chart pattern. So given an opportunity, if somebody sees some bounces, because for the last 7 trading sessions, the counter is trading lower low. So, and it's come to the oversold zone. So because of this reason, if there is a bounce close to 570, 590, that should be viewed as an exit opportunity, because near term, there is a high probability this 500 levels will be broken down on the downside.
Hi Brijesh, before we let you go, could you give us your top 5 picks for the markets?
Yeah, sure, sir. So as I said, I think the PSU Bank is one which is leading the momentum. I would take a buy call in the SBI. It's looking quite good, positive on charts. Current level, the stop loss for the trade would be 556, and I'm looking somewhere 583, 585. This again a trading bet, not to be too much of a directional, but then somebody wants to take a weak call, can go long on SBI. Then I was looking at the TVS. After the result, the volume has come up. I think because of the market today is slightly down, because I think that can be again a buying opportunity with a stop loss of 1588 for the target price of 1648. So TVS, another 100 points kind of a trading bet can be seen in the TVS Motor. Somebody wants to take a slightly bigger picture of 5 days, 10 days kind of a time, then Vector Food is one stock which is at the verge of giving a breakout. Technically, I think it will see a good breakout on the higher side. One should buy at the current price for the target of 1 second. For the target of 1300 to 1350. And one more stock which we saw good breakout and with good momentum and volatility was the Muthoot Finance. So I think Muthoot Finance is one bet in today's correction. I think we should buy this with a stop loss of 1252, and the target would be 1474. And one more, I would like to take a call on the Alchem. So this is a very good structure. It is about to give a buy from the lower side. I think range consolidation range breakout is expected on the LK. One should buy the current price. 3673 would be the stop loss for the target of 3765.
All right, that's the view coming from Mr. Brijesh. Sir, always a pleasure talking to you. Thank you for joining us on First Take this morning.
Thank you.
Now, Amit, a big number is due to come out today. The September quarterly results of Bharti Airtel will hit the streets today. What are the broader expectations over there?
Start from the net profits. According to analysts, net profits are likely to be down close to 10%, around 9.7% what they are expecting year on year, from 2,145.2 crores last year to 1,936.9 crores this quarter this year. This despite a 11 to 12% rise in their sales. Revenues are expected to see almost an 11% jump to 38,259 crores this quarter, up from 34,526 crores the same quarter last year. EBITDA is also expected to jump around 13.4%, which is expected to come in at 19,956.6 crores this quarter, up from 17,593.8 crores the same quarter in the financial year 2023. Now, one reason for a decline in the net profits could be two. One is their decline in Africa numbers, and two, they are targeting a 5,000 crore market opportunity in its enterprise offerings, be it communication platform as a service, CPaaS, cloud, cybersecurity, and data centers. So plowback will be big, and therefore, the company is expecting 80% corporates to put up the 5G within the next 5 years, next 3 years.
So basically, they're building on that capacity for that 5G, and that's why we are seeing some sort of
the services that go with the 5G.
All right. So probably that will be one of the reasons why profitability will take it.
One reason I can only speculate here.
And also additional provisioning for AGR dues.
AGR and the decline in the Africa business.
All right. Let's take this to Mohit Gang. Mohit Gang, co-founder and CEO at Moneyfront, is also joining us this morning. Hi Mohit, how are you? Good morning.
Hi Suyash. Always a pleasure to be with you.
Yes, sir. We were just discussing the expectations from Bharti Airtel. What are your broader expectations, sir? The numbers, do they add up from what we were discussing?
Look, I think more or less Street is expecting what you guys have shown on the screen. I think I'll be more keenly watching on the announcements, obviously pertaining to the Africa business. I think the Nigerian business particularly is the biggest business they have out there. And they have seen a profitability decline out there. And also a lot of Nigerian currency depreciation has kind of hit them out there. So that is one. I think what is the future outlook for that business will be keenly watched. Second is obviously, and the biggest item is the 5G rollout, their capital expenditure and their plans around that. I think that is what the Street is wanting to hear more about. But otherwise, I think on the revenue front, EBITDA front, I think more or less in line with the expectations. On the ARPU front, I think they will show an increase of around 2% from the previous quarter ARPU of around 200. They should go to roughly around 203 to 204 rupees. So I think fairly in line with the Street. So it's all about the future announcements as to how they take up the 5G rollout and the Africa business.
Now, Mohit, the stock this morning is trading with losses of about 0.8% or so, but has given good bit of returns, on a year-to-date basis. I think it's up about 14% or so, outperforming Sensex and Nifty. What's the outlook on Bharti Airtel? Is it a stock that one could add in their portfolios?
Look, Suresh, finally, I think India is a data-hungry country, number one. Number two, it's more or less becoming a duopoly kind of a market. So you can always argue Vodafone is still out there competing for the pie, but I think they're losing market share by the day to Jio and Bharti. In terms of number of subscribers, I think Bharti will add another crore or so in this quarter. From 33 crores, they should go up to roughly around 34 odd crores subscribers. So my sense is the story of data consumption remains extremely robust in India. India per se is a market with lowest data rates across the globe. So I think there is a lot of headwind, as in there is a lot of headroom for the rates to also inch up, plus the data consumption to go even higher. With the 5G rollout, I think Bharti and Jio will become even more prominent. So it's never a bad idea to hold a stock which is a duopoly kind of a company in the country, right? So I think it's a good long-term bet.
Now, another company that will come out with its quarterly results today is Larsen and Toubro. Now, the stock overall, let's come to the stock. After that, I think Amit has got the expectations ready for us. Amit, what are the street expectations from L&T?
With L&T, the numbers are bigger. L&T net profits are expected to see a climb of 28% year on year to 2,849.1 crore this quarter compared to 2,229 crore the same quarter last year. Revenues are expected to again rise another 18% year on year to 50,278.3 crores, up from 42,762 crores last year. EBITDA margin is likely to see almost 100 BPS decline, marginal one, coming in at 10.5% as against 11.5% a year ago. So that is the numbers with L&T.
Mohit, I'm looking at the stock prices. I think it's trading, on a flattish note this morning. In the last 1 month, the stock has declined about 4%. But as we know, L&T has been on a bit of a fairy tale run in 2023. I think it's up about 41-42% or so, but has come under pressure lately. What are your expectations from L&T? Is it a stock that one can add at this price point, or should we wait for some correction, sir?
Look, Suresh, I think for L&T is a stamp on the Indian growth story. Look, you see L&T and you see the Indian infra story. It is like a bellwether stock which kind of shows what is happening in the country. It is one of those bigger indicators. If you see the stock, you can actually track the economy per se as to how the infrastructural growth is shaping up in the economy. So my sense is, look, I think with L&T, the revenue and net profit story will be extremely strong. On the margin front, yes, they'll be more or less neutral, is what the street is expecting, maybe a little negative on that front. But I think the net profit and revenue will show a superb increase. Plus, I think they're getting larger orders. For last quarter, what I know is I think they've taken some bigger orders from Aramco in Middle East, and they have got one or two larger orders in that part
24,000
of
to
the world.
25,000 crore worth of orders.
Absolutely. Yeah. So the big order story is fairly strong and robust. The pipeline is fairly strong and robust. The way government is spending on this sector is extremely strong. They've also got one tunnel, very large order from MMRDA for a tunnel digging and all those kind of things. So I think L&T is a fairly robust signal on how the economy is shaping up. My sense is the infrastructure story is just about begun in this country. It's tip of the iceberg which we are seeing, and I think with increasing government focus on developing the infra across the countries, with more tier 2 and tier 3 cities trying to become larger urban centers, I think this is a secular story, right? You can always argue on valuations, you can always argue on execution, and hence so on and so forth. But for someone who's looking at a 10-year kind of a story, I think this is a great story to pick.
L&T looks like a good buy as per Mohit, a great story, and will add to India's growth story as well. Now, Mohit, last time you were here, you had advised to keep away from markets at least for some time now. In the last 2 or 3 sessions, we have seen a good bit of a bounce back in Nifty. Although, let me add that the bounce back that we have seen, the 300-point bounce back, most of it has come from only a couple of heavyweight stocks, your RIL and your HDFC Bank. Has that view that, keep away from markets for now changed, or are you still on that same line of thought?
Suresh, I think I'll hold that view for another 10, 15 odd days, maybe. I would really want to see some amount of cooled off in the geopolitical situation right now. I don't see a cool off there. I see a daily basis, a slight bit of incremental escalation on a daily basis out there, which is a little bit of a worrisome scenario. I would also want to closely watch out the Bank of Japan commentary today. I think what is their action on the YCC, which is the yield curve calibration. I think that is what I want to watch, and plus the Fed coming tomorrow, right? So I think there are few larger signals which are out to come in the market this week per se. So along with geopolitical situation, with the Fed, Bank of Japan, and even Bank of England coming out with their policy this week, I think this week is a wait and watch kind of a scenario for me. And post that, I think we'll take a call. Though oil has been cooling off, but yeah, I'm still a little skeptical on the overall situation.
Now, Mohit, as you rightly pointed out, US Federal Reserve policy decision will come out tomorrow and it will be keenly eyed by the street. Now, I think reading from a lot of reports, most of the analysts are expecting a rate pause this time around. What are your expectations? Are your thoughts also in line with the expectations?
I think, look, finally, the outcome of any central bank's policy is to see where the interest rates are already there in the economy and are they matching up to their levels. Even though Fed might not have raised it to a level, but the yield, the 10-year US yield has already inched up to a 5% kind of a level. It's currently at around 4.8, if I'm not wrong. So the yields have already shot up, and which is what the Fed wanted in first place. So my sense is there's no point for the Fed to raise the rates further and again create some mayhem in the on the bond front or the treasury market front. So my sense is, yes, I'm also expecting that it'll be a pause for this time around till Fed watches further what do you say, inflation data or the growth data in US. So I think it's a pause.
Hi Mohit, keeping the thought of keeping away from equity for some time, as you said, now gold is hovering around the 61,000 per 10 grams rate right now, but it has not hit its all-time high which it hit in May, which was around over 63,000. Do you think it's a time to go for gold right time at the moment instead of the equities, as you're saying, to keep away from them?
Look, Amit, I've been fairly bullish for some time now, to be very honest. I think gold is looking like an attractive buy given the geopolitical situation and other factors around the overall what do you say? I think gold has also given muted returns for last few years. So my sense is a rally is overdue out here. But I'm very keenly watching the $2,000 mark. For gold to give us a meaningful return, I think it has to sustain a level above $2,000 for a week or so, or maybe few days put together. Once it does that and considerably inches above that level, I think we can perhaps look for a rally in gold. It is also directly correlated with my view on equities right now, which is a kind of a wait and watch scenario for next couple of weeks. So I think if that scenario pans out on the equity, then I think the positive view on the gold should also pan out. However, markets can always surprise you on either side.
Mohit, also want to get your view on silver. Now, silver generally, follows gold's direction during a time of crisis, like we have seen in the past 2 to 3 years. And I mean, in the last 2 to 3 years, we have also seen silver outperforming gold. But now this time around, given that we are in a situation where Europe could be possibly slipping into recession, do you expect that gold will outperform silver this time?
Very difficult to call that out, Suyash. Honestly, it's my sense is metals more or less follow each other. In fact, the commodity pack for last one odd month, if you see, has been showing some sign of strength. Though the data from China is still not very strong. I should put it out here that I think the Chinese services PMI and the manufacturing numbers, both which came around, I think, a day back, were not fairly strong. Though Chinese government has again pledged to pump in more money in the markets, right? So my sense is, look, the metals have been showing some sign of strength. I think per se zinc, copper, these are few metals which have been showing some sign of strength for last one odd month. And if gold rallies from here on, which is what I'm expecting, then I think silver should also follow suit.
All right, that's the view coming in from Mohit gang. Sir, always a pleasure talking to you. Thank you for joining us on First Take this morning.
My pleasure. Thanks.
But with that, it's a wrap on this edition of First Take. Keep watching News 9.